Cemex is a Mexican cement manufacturer, one of the top 3 in the world. It's also involved in the related businesses of ready-mix concrete and aggregates. It's an absolutely fascinating company because it was one of the first emerging market corporations to outgrow its home market and legitimately become a world-class company on the global scale. There are basically 3 reasons for its international success. First and foremost is its operational excellence. Its plants typically operate at amongst the highest capacity utilization in the industry. The second key ingredient is that Cemex consistently uses its cost advantage, both in terms of fixed costs and variable costs, to generate tremendous free cash flow. And the third element is that once this cash flow has built up a sizable cash balance, Cemex goes out and does large accretive acquisitions on a regular basis that materially increases the size of the company. Cement, of course, is a commodity. And here at Toron, as part of our mandate of managing wealth for high net worth families and individuals, this will typically result in client portfolios that not only have bonds but have a number of dividend paying stocks, which should be viewed as interest rate sensitive investments. In this sort of portfolio, inflation is going to be a significant risk, and commodities is one of the best way to mitigate that risk. Having said that, from Toron's perspective, not all commodities are created equal, and we have a strong preference and have always had a strong preference for what we would term the non-futures commodities. These are commodities whose price is determined by the buyers and sellers of that commodity, as opposed to speculators in the futures market. This leads us to prefer commodities such as cement, timberland, and iron ore and steel, as opposed to something such as copper. And the reason we have this preference is that it allows us to benefit from the demand in commodities that's resulting from the increasing strength of the South Asian economies, but reduces the short-term variability associated with speculators in the futures market. Cemex stock has languished in recent quarters, and the reason for this is that, as I mentioned earlier, it does do a significant portion of its business in the United States, and this business has obviously suffered with the slowdown in construction of residential housing in the US. It's easy to utter the phrase buy low and sell high, but to do so in the real world, of course, is much more challenging, because typically that opportunity to buy low is predicated upon the presence of a negative element. And for Cemex in the stock right now, that negative element is its exposure to US housing. However, for investors with a somewhat longer term perspective, it's important to note that Cemex is in the process of creating a tremendous amount of shareholder value. As I mentioned earlier, the company habitually does large acquisitions, and right now it's in the process of integrating its second large acquisition in the last 5 years via its purchase earlier this summer of Australia's Rinker Group. This is a deal that will grow the size of the company by roughly a quarter over the next year. In terms of the stocks we hold in our client portfolios right now, Cemex is probably the one that is cheapest, meaning it is the furthest from where we think its intrinsic value is, and the current price level is an excellent opportunity for investors to purchase shares in a genuinely world-class corporation at a very attractive price.